Good afternoon, everyone. It's 4 o'clock, so let's start this webinar on time. First of all, thank you for everybody for joining us. This is the first session of our 4-part webinar series that we're conducting on the BRSR. This is to help to make the corporates ready for the BRSR cycle that's coming up for financial year 24. We've titled it Tuesdays for Transition for a reason. We believe that the format for the previous cycle and the format for the current cycle, there's quite a bit of a change, and we really do need to step up. And this webinar series is an attempt to help make that change. This webinar series is being conducted by AdQuest Sustainable Solutions. I'm Manisha Joshi. I'm an ESG consultant with AdQuest, and we are sustainability consulting providers. We provide advisory services as well to corporates and to educational institutions. As part of this work, we also help organizations draft their BRSR reports. We conduct, and not just that, we believe in doing that in the right manner, which would help to make it a very extremely mature report. We also do a lot of analysis on BRSR reports, and we conduct gap assessments on actual reports submitted by companies as well. So let's just get started. You might have noticed these 4 topics when at the time of your registering for the webinars. This is an attempt to make sure that we give as 360-degree view as possible of the BRSR and what next. If you can see that there are going to be speakers from XBRL and from assurance side as well. So we have some, great content lined up for the next 1 month. This series is happening from 4 to 5 every Tuesday starting today. So the topic for today is the BRSR gone by, the hits, misses, and opportunities. Basically, this is for the cycle that just got completed, the mandatory reporting cycle that we just had. We would be discussing the things that probably went really well, the things that didn't go so well, and the opportunities for improvement and how we can get there. Our speaker for the day is Mr. Anveshi Gutta. He is the CEO of AdQuest. Brief introduction to Anveshi. He was, before he founded AdQuest, he was previously a director at PwC. He is a TEDx speaker on corporate sustainability. He is also a member on the technical committee of the ESG Exchange. And before we dive into the webinar, just to give you a little bit of the structure, after this introduction, Anveshi will be going through his topic for the next 30 minutes, after which he'll take up questions for another 10 minutes. And the last 15 minutes would be an exclusive sneak peek into the work that we are doing in AdQuest. We would be presenting the gap assessment service that we are providing to customers. And you would be able to see some of the work that we're doing for our customers, which otherwise we would be only showcasing to our customers. So just to let you know that we would be taking questions only via chat. So we request you to type in your questions. That apart, we will, in case we run out of time and due to shortage, if we're unable to answer your questions in this 60 minutes, we will definitely get back to you via email and answer your questions. So yeah, that's about it. With that, I'll pass the mic on to Anveshi to deliver the talk.
Thanks, Manisha. Good afternoon, everyone. People who've logged in at this hour, 4 p.m. on a Tuesday afternoon. Thanks for coming in. I hope it's going to be a good, worthy investment of an hour of your time today, and also in the subsequent weeks that we have content lined up for you. So I'm going to start sharing my presentation as we get there. I've put things on slideshow. Manisha, if you could confirm if you're seeing the presentation on slideshow.
Not on, yeah, I can now.
No. Yeah. All right. Cool. Okay. So yeah, Manisha kind of laid the introductions well enough in terms of even this topic, where the intent of this session is primarily about what has been observed in the first mandatory cycle that has just gone by, about a month and a half since it's gone by. September end was the last date. In terms of how companies have gone about reporting it. I mean, some have done well, which is where I think the hits come from. Some have actually had a few issues about the way they've gone about. Maybe we'll call them the misses. And then there's a significant amount of opportunities that have been tapped, could have been tapped maybe, and we'll look at that as well. But before we get to all of that, what is important for us to also kind of understand and maybe appreciate with the diverse group that we are on this call is that the whole uh, BRSR reporting approach is also evolving with each passing year. Definitely, a lot of action has happened in the last few months, last 6 odd months, and so we will also look at how that action will possibly have a say in how things go in the next year. So with that said, yeah, that's the topic we're going to touch upon, and I'm going to move forward into the subject soon enough. What I'll do for the next couple of minutes is just to set some context, not just for this session, but the four sessions that are coming up as part of this Tuesday for Transition series that we are doing. BRSR, just in 2 bullet points out there, mandatory annual reporting for top 1,000 companies, which started in 2022-23. Reporting has to be done in two formats, the PDF and the XBRL, something I believe most of us on this call would be already familiar with. There's a structure that SEBI had come out with, very clearly articulated in terms of the structure of what is expected, the quantitative data points, the qualitative data points. So there was an expectation that everything falls in three sections, A, B, and C. A was more of a general disclosures about the company, whichever is reporting. Section B was a significant focus on the process, policy, procedural aspects of how you're going about looking at various facets of sustainability, not just about environment, but various facets. And section C, and that is where I think a lot of detail comes in, is where the 9 principles get addressed in each section or in each subsection, with again them being split under the essential and the leadership indicators categories. So essential category indicators are the ones that are mandatory. Every company, irrespective of whether they are small or big, will have to report on these. Leadership, you are given the liberty, whether you're company number 1 or company number 1,000, you are given the liberty to choose if you wanted to go and report for leadership. So that's the way it was distributed in terms of the structure. In terms of the format, there were two formats expected, the PDF format and the XBRL format. Now, a lot of time, last cycle at least, we know because of the work we've done with our clients, was spent on the PDF format, and XBRL did come into picture, but a little late in the day. So I'll tell you why I'm emphasizing that as we go into the conversation. But important is to note that PDF and XBRL both are required. One of them, and in this case, the PDF, is the human readable format, which is, of course, very obvious because you and me and all of us on the call typically would have understood a sustainability report much better if it was a PDF. But if at the same time I had sent the XML format, the XBRL or XML format your way, we would possibly have few of us at least would have a struggle to interpret everything that is in there, because that was meant for a software to read and not for a human to read, and that's why it's called machine readable. Now, both of those are still an expectation as we go into the next cycle, but at the same time, some things are changing in the next cycle and subsequent cycles for that matter. So we are at 22-23. We're talking of the top 1,000 companies that have reported their mandatory cycle, finished the mandatory reporting cycle. Now we're moving into 23-24. While that's 1,000 companies, mandatory reporting will still be around. What will change is that the top 150 of the 1,000 will be able to submit a third-party assured BRSR report. Now, third-party assured, at the same time, there's this thing called reasonable assurance. Again, a technical term. just to keep things easy, all that it means is that it's the stringent form of assurance, so to say. So we'll have an expert speak about this in this fourth session that comes up. But reasonable assurance is what is expected, is what you may want to know, and the fact that it's a stringent form of assurance. So that's the additional expectation from the current financial year onwards. The next financial year, top 250 companies will have to do the same task that the top 150 were doing here. So 150 becomes 250. At the same time, these same 250 companies, if you notice, are expected to additionally submit disclosures for their value chain. So if till today you were looking at your reporting boundary to be either a standalone or a consolidated one, but for your own entities only, from 24-25, these top 250 companies will have to also go and ask their suppliers, or for that matter other partners in their value chain, to furnish the same sort of data that they themselves are furnishing to the SEBI authorities, which means it's all as good as saying ask your suppliers to fill the BRSR and submit it to you, so that you can then collate it all together and make something much more meaningful and meaty out of it to submit to the authorities at your end. So that's 24-25 for you. That will be changing. And then comes 25-26, this 250 companies becomes 500. And the other thing that changes is with this value chain, the supply chain that we were talking about for the 250 companies, even your your suppliers inputs will have to go through a third party assurance now. So while earlier it was about your own inputs going through a third party assurance, 150, 250 and a 500, here comes a case where you're asking your third party limited assurance for value chain also. Now, limited assurance is the slightly more relaxed form of assurance. I'm not going to the technicalities of it because, like I said, there'll be an expert who will come and speak anyways. But just for us to understand, limited is easier than a reasonable assurances. Then there is the last milestone on this map, which is FY27, when all the 1,000 companies are expected to go for what is called the reasonable assurance. At the same time, this 250 companies will continue, which is not mentioned here, but that is also meant to be applicable for 26-27. So 1,000 companies for themselves going through reasonable assurance, and 250 companies of the 1,000 picking up their value chain also and making them go through an assurance or an audit. That's the mention of the timeline here. With that kind of a timeline, you can sense that there will be a widening and deepening of the scope of these BRSR exercises from these companies, because of which we need to now start stepping up, and we'll do one at a time. What we'll do is we'll zoom into what is coming up for the 24 cycle, FY24 cycle. So we all just looked at the fact that there was a format of the BRSR which was used for FY22-23. In July 2023, which is about 4 or 5 months back, SEBI came up with a notification in which it included the fact that a few things will be appended or added to the existing format, of which 49 new entry points or new data points were brought into the format. So this 49 were never in the picture of FY22-23 format. So 49 new data points, not 49 new questions, mind you, data points, because again, there's a set of questions that come up in table format. So that's why I'm calling them data points. And then there are a few questions that were earlier in this 22-23 cycle in the leadership indicator, which I mentioned were the optional ones. They've been moved upwards into the essential indicators. So which means if you by chance in 22-23 had not reported on those leadership indicators because they were optional in nature, of course, now you will unfortunately have no go but to report on those 35 data points which were earlier in leadership. So put together, those changes have formed what is the new BRSR format for 23-24. That's one big change that has happened in the course of this last 6 months. Another big change is the introduction of assurance through BRSR core. Now, BRSR core, to put it very simply, is like the word says, the core. It is the of the entire BRSR report, and by that I mean it is definitely something that maps itself out of the essential indicators section, but not all of the essential indicators. So what SEBI has realized is that if we were to ask companies to go through an assurance of every data point, qualitative, quantitative response, and then give a certificate that says that the report is assured, it will be very challenging, at least to begin with. So what they've come up with is this BRSR code, which is nothing but a set of attributes, in this case 79 KPIs that have been identified and clubbed under what they call the 30 assurance parameters, and further clubbed under what are called the 9 assurance attributes. So basically, you can imagine these to be 9 broad thematic areas on which the core is based. And I repeat myself, all of the core, as per the July notification that came from SEBI, all of the core is mapping to the essential indicators section of the new format for BRSR that came out for 23-24. So if you look at the 9 thematic areas of the attributes, you have GHG footprinting, water footprint, energy footprint, and something that you could easily relate to if you were to look at principle 6 and of the BRSR format. Then there's circularity, employee well-being, gender diversity, things that are more social in nature, inclusive development, etc. And then there's openness of business and engaging customers and suppliers in a fair manner. So there's a balance of E, S, and G in the way these attributes have been arrived at. And what will be checked under these attributes is articulated further down in what is mentioned as the 79 KPIs. So that's the other change that has happened, the assurance and details around BRSR core. With those two broad changes that we are talking about, if you were to look at the next year, how do you go about it? The ideal way to go about is to be aware of the fact that, and I've mentioned this already a couple of times, the fact that all of it that is required under the BRSR core will have to come from the BRSR. And if it has to come from the BRSR, from the word go this year, unlike the last year, from the word go, you may want to start preparing your answers to these questions that you are drafting in your report in a manner that you know will stand the test of assurance when it comes to it. So 80% of the BRSR core requirements, which is 79 KPIs that I mentioned, 80% of that is something that is directly available in your essential indicator. But there's another 20%, which is mapping to the essential indicators. But if you were to look at what is being expected from an audit perspective, the auditor will have to probably sit with you and trace it back to the metric that is not necessarily positioned in the BRSR. So you may have put a particular data point in the BRSR. That data point to arrive at would have gone through some sort of internal calculations, and that calculation is what would be of interest to the auditor, is the point we are making. So 80% is directly traceable, 20% directly available, and 20% is traceable, is the way you should understand this. Although when we get to, I think, session number 2 or maybe even 4, you will get to see the fact that there is one small caveat there, which is about the fact that maybe there's one KPI of the 79 which doesn't come from the BRSR at all. We will touch upon that, we'll discuss that. But at this point, at least in a nutshell, this picture is what you may want to be aware of. 80-20, 80 of it is direct and 20 of it is traceable. With that said, I think what we will do from here on, I believe the level setting exercise is something that hopefully we've done now. With that kind of context, what we will do is we'll get into a few observations and a few instances of what we have noticed about the BRSR reporting as we went through reports from the last 2 cycles. Why do I say 2 cycles? Last cycle was the mandatory cycle, but the one before that, which was FY 21-22, was an optional cycle wherein 150 companies just volunteered to come forward and submit their BRSR. So we have looked at all of those reports for the last 2 cycles, and basis that brought out a few observations. Now, while what you see on the screen is 6 broad phrases, be aware that we are talking of the entire BRSR report, which is a mix of quantitative and qualitative responses. Some of them will definitely have a quantitative correctedness required. Some of the others will have a qualitative correctedness required. We'll get to that. First things is that when it comes to quantitative disclosures, it's important to make sure that the numbers that you're putting in the report are reliable. That's the first observation we are making. And the reason we call it an observation is because if you notice the reports that have gone by, some of the instances that I'll talk to you about in the subsequent slides, you will notice that it hasn't been achieved well. At the same time, the units of measurement, whether it is a kg, whether it's a ton, whether it is a liters or whatever, units of measurements have to be correct. And some places, unfortunately, that has gone a little out of the way. So we need to look at that as well. Then we were talking about two formats, PDF and XBRL. There is, in cases we have noticed, what went in the PDF formatting versus what went in the XBRL formatting was out of sync. And that's another observation we'll talk about. Then there are answers that are unfortunately leaving a lot of ambiguity out there, not clear, not easy to kind of precisely understand what you're trying to say there. So that scope of ambiguity is unfortunately there. Do not leave that scope is the observation here. And then consistency of data that has been seen in these reports. Within the report, the same data point has been written in two different places, into two different ways, or rather the numbers or have been represented incorrectly in one of the places at least. Or there are also cases where across the BRSR report and another report, whether it is the integrated report, whether it is the annual report, whether it is your BRSR report from the last year, whichever way it is, there's also inconsistencies that we've noticed there. And finally, the formula for calculation of some of these data points hasn't been appropriately applied. So those are the 6 broad observations that we are seeing on the screen right now. We'll take one at a time. And as we go into this, I want you to understand that the format will be about us bringing to you a snapshot of a certain report by a certain company, no naming the company at this point, but a certain report by a certain company where we believe things have been either done right or in most cases, unfortunately, done wrong. So we'll highlight that and we'll bring that instance to you for you to kind of understand what you can take care of as you draft your 23-24 reports. So with that said, the first one, reliability on the quantitative disclosures. Now, the first instances of this table that we are seeing from Principle 6, the section that where we talk of electricity consumption. Now, the detail that you want to notice here, again, because we've highlighted, should be easier, but let's see. We're looking at 2 years, 22-23 and 21-22. There's one case of 6.6 here and 32.59 here, both metric tons, of course. Now, it says 6.6 HVAC systems and 32.59 HVAC systems. Now, if you notice this comment at the bottom, and I'll read it out loud because it may not be readable. For the previous financial year, HVAC data was reported only with respect to the head office of the company. Now, what that means is that 6.6 is only representing the data for the head office, but 32.59 may include head office plus. Whether that plus is X number of branches, Y number of branches, we don't know, but it is plus for sure. So the reason we've highlighted that is because when you and me, when you're reading this, when you're looking at this particular table, you typically are looking at these two columns and trying to draw comparisons. I see that total electricity 1906 2454, it's increased about 20%. I'm drawing a inference at this point. But because of such data, which of course has been very well validated with a note here, but you cannot compare. The comparability approach that typically is expected with tables like these is falling through because it cannot be compared anymore because they are two different, representing two different reference points. So that is one thing. The second thing is, if you take these numbers directly into the machine readable XBRL format, the machine will not bother about this note. This note is only understood by you and me as a human. The machine will only look at 6.6 and 32.59 and draw a trend line that shows that you're jumping 500 times over what you had reported in 21-22, which again is not the right representation. The point being that if you happen to change something that's the reference point for 1 year, make sure that you apply the same for the next year also, at least in the same report. The next report, you may then go back and say, we will now change the reference point for both the years, and that will make it easier. That's better. At this point, this is one observation. Second one, if you notice here, this is again Principle 6, Scope 1, Scope 2 emissions. And if you just read the way this is phrased here, and this is exactly what SEBI's phrased, how SEBI has phrased it. Scope 1 and Scope 2 emissions per rupee of turnover. right? If it's that's what it means, it of course is expecting you to take to scope 1 emissions, scope 2, sum them both and then divide them by turnover. But what has been done here is that just the sum of those two has been mentioned here, which is unfortunately not matching with the the label that you see here. So either it should have just said scope 1 and scope 2 emissions, which would have meant these total numbers. But when you say per rupee of turnover, the division by the turnover hasn't been done. And this again is a case of misrepresentation, right? That's two of those cases where quantitative numbers could have been represented appropriately. Now, if we move one step forward, we're talking of measurement units. Uh, Out here again, scope 1 and scope 2 emissions, which we were looking at. But importantly, if you notice, there's a column heading here which says unit metric ton of CO2 equivalent. But further down, there's something that says gram per rupees. Now, clearly, metric ton of CO2 equivalent, if it's mentioned there as a column heading, this unit again is causing some confusion, more so because it's kind of moved away from the ton approach to the gram, and it's retained the rupees, of course, but the gram is what it is. And typically, we most of us would know by now that the carbon emissions are always metric ton measured. Gram is not a unit that's typically used for carbon emissions. You could have probably done that, avoided that scenario here. Further down, there's this e-waste scenario. Now, here the challenge is that the company in question did not have weight-wise data available, which I think is probably because of the fact that there's no recording system, so to say, of how much of weight e-waste by weight has gone out. So what they've done is they've got the numbers 5.45 and 806 in lakhs, represented in lakhs. Now, unfortunately, the challenge there becomes that everything else, if there was anything like plastic waste and all, is expected to be, including e-waste for that matter, is expected to be in weight, which is kgs and tons. But this one is in lakhs, and that is where we are not able to judge if that lakh number, the number monetary figure that you've given here, is that the value of the e-waste that you have submitted to submit it to the recycler, which means I have 5 laptops, each laptop costed me 40,000. So I'm saying that the 5 laptops put together is 2 lakhs. Is that what I'm saying? Or am I saying when I gave my waste of whatever weight it was, what I got back in monetary value is this? It's not very clear. So that's where the clarity could have helped. An additional note could have helped at this point. But all said and done, avoiding a rupee representation in this kind of a table would have been ideal. So stick to the units that are typically used for waste measurements, which is in this case weight related units. So that's the observation number 4. Again, further on the measurement units, question 5 here, scope 1 and scope 2 emissions, yet again the same case. Now what you notice is that this one says total scope 1 and scope 2 emissions. I mentioned to you while I was on the previous slide that the SEBI's table format says scope 1 and scope 2 emissions per rupee of turnover, which is exactly what you see here in the bottom row. But they've introduced a new row. This was not in the format, they've introduced it. And of course, that is fair enough till that point. But what they've done while introducing it is that they've not looked at the fact that this unit has to be updated as well. The unit has been left here with a per rupee mention. So the more you kind of do these things, the more the scope for confusions to arrive. And so the ideal way to go about is just to look at the few rows that are there and stick to the format, stick to the units as much as you can, and just provide the data points that are expected exactly on the format. Then there is this other place where the electricity consumption, all of it is coming from principle 6, I think, because those are heavy in terms of data points. Here again, you would see a lot of electricity consumption, fuel consumption data in INR. And again, a good note has been provided here saying that we wish to inform you that the encountered difficulty in quantifying its electricity and fuel consumption in terms of units. Nonetheless, we have diligently maintained precise records of the expenses incurred on energy consumption during this duration. And that's exactly what they are saying is represented here. Right now, that representation of INR is again, unfortunately, not helping because there's no way for you to judge the energy consumption aspect, because like they go on to say here, there's also varying rates that apply in different cities, different states and all. So it's not something that can easily be inferred from here. So INR, instead of the typical expectation of joules or multiples of joules, is not helping here. So units have been changed, and that is not the way to go, is the suggestion here. Further on, now we go to PDF reporting versus XBRL. Again, I repeat, PDF, human readable, XBRL is machine readable. A typical XBRL format is what you see at the bottom. But before we get to that, let's look at this particular table. This is all water consumption data. We talking of intensities, energy intensity, emission intensity. There's a place for water intensity also. So you see this number 13.54 with a small star mark there. And what does that indicate? Turnover in crore of rupees is used for a readable number. A lot of reports have done that, quite honestly, because without that, it would have been 0.000, probably 6 or 7 zeros and 1354, which wouldn't really make sense for the reader. So what they've done is, instead of turnover in rupees, they've taken turnover in crores. And so that hence 13.54. So far, still acceptable to an extent. Now, what has happened, unfortunately, is that the same company, as they filled up the Excel utility that typically would have been used to generate the XBRL format, the Excel utility will not accept your crore of turnover as the denominator. It will only and only insist on direct rupees in terms of the denominator. So that flexibility that you had when you were doing your PDF is not there anymore, because XBRL has Excel to the Excel utility, and the XBRL format also has a compulsion that you will have to do it in a certain way. And that certain way is that you'll have to convert this into the number in with a denominator of rupees. Now, what has happened is that to arrive at that number, the person who prepared the report, 13.54 was multiplied by a crore, 1 crore, and that's how this was arrived. But unfortunately, that's a wrong approach, because what should have been done is not a multiplication of 13.54 by a crore. It should have been a division of 13.54 by a crore. And just with that mathematical error, the number that is come out here in the XBRL format is 12 times or maybe more. When I say 12 times, I'm saying it's actually in crores, while it should have been in -7 kind of a decimal. So that's the kind of difference it makes. And imagine this going through a machine or a software, and then somebody judging you on your intensity number because it looks so huge. So these are the human errors that can be avoided. It should have been something like this, 0.0000134 instead of 1354 followed by those many zeros. Right? So that's the XBRL. So paying attention to these aspects, as you know that you will anyways have to report PDF and XBRL, is a key consideration for companies, is the point there. Now we talk of retention rates. This is example number 8. Retention rates, rather this is return to work rate, not retention rate. Return to work rate. The expectation here, I think, has been from the cases where people or the employees take a break from work for a while, and then they are getting back to work. Whether it was during the pandemic because of corona reasons, or maybe otherwise because of other personal reasons that people do it. But the return to work rate is what is expected here. Now, if you notice what has been done in these two cases, by the way, these are two different reports that we are talking about, two different companies and two different reports. But in both the cases, they've mentioned it not in terms of percentage. The return to work rate is a percentage figure, and that formula is here. Where is this coming from? This is coming from the SEBI guidance document. It is not something that anybody has to guide you separately on. SEBI had published in black and white the guidance document, and they had in there included the formula itself. So the formula was supposed to be total number of employees that did return to work after parental leave divided by total number of employees that were due to return to work, and multiply that by 100. So that's how you would have arrived at a percentage figure, and that's what should have come here. But what has been put here is absolute numbers like 89 and 166 and 24 and 4. So that is exactly where at least the right formula used for this particular column would have given you a much more clearer picture of the return to work rate than this. So in this second case, very peculiar, 100% for both female and male employees returned to work. That's the statement that's made here. 100% of both female and employees. Now, if that is the case, then why is it that we have 24 and 4, which is 28 only, is something we failed to answer. So it is not a company that has only 28 employees, that's for sure. But somewhere something's not matching up. And that's exactly what you may want to avoid from a reader's perspective, from a stakeholder's perspective as well. Then there is this consistency of data within or across reports. Now, what you're seeing is the two snapshots of the BRSR reports of the same company in two cycles, FY 21-22 cycle and 22-23 cycle. 21-22 cycle, they have reported a certain set of numbers when it comes to the air pollutant data. So these are the numbers. Now, when it comes to 22-23 cycle for the same year, 21-22 column has come here, and they've represented the numbers here. If you notice, the numbers don't match, but they also have mentioned here, it says this is a restatement from last year. So if it's a restatement from last year, the last year's data was this, it cannot change in this year for sure. Something's not looking right. So the fact is that while you may believe that the report that you're publishing this year is looking in good shape, you will want to be aware that the data points from last year's reporting cycle and this year's reporting cycle will also be analyzed, if not by a human, definitely so by a system, a software out there, because XBRL data is so very accessible. So that inconsistency across reports is also not something which you should have at all. So try to keep that check going. So that's that. Moving forward, there is this another type of consistency that we are lacking. Here's a case where a particular, just stay with me on the left side for now, left side of the document of the slide. This is again a lot of data that's about waste. When you look at the way they've reported, answer this question 8 and then moved on to question 9, they've said for information on waste management practices of our company, please refer to the section waste management on page 136 of the natural capital chapter. They're referring to the integrated report of theirs. So on page 136 of the natural capital chapter is where they believe you can read more about waste management, because of course the SEBI format, the BRSR format is very structured and there's not that much of a scope to give all the details in this format. So okay, we went there, we checked this report on their integrated report, check this page, and we noticed the section there. But what we noticed, strangely so, is that while you are capturing in this particular format hazardous waste, what is mentioned in the integrated report is non-hazardous waste. The numbers are the same. If you notice 7344 for FY22, it comes here. 7344 for FY22. 6978 for FY23 comes here. 6978 for FY23. But hazardous waste and non-hazardous waste. So clearly you are not in sync in two places. Unfortunately, in your case, you have yourself guided the audience to go and check there. And that is where the discrepancy was found. Hazardous in one case is what has become non-hazardous in the other. So there will be other aspects as well. But at this point, I'm trying to just highlight the consistencies that have been missed out between two different documents, both of which are on public domain, right? Then there is this last couple of instances. Here's a case of a company which talks about the water withdrawal details. There's, of course, if you recall, look at the BRSR format, there's surface water, groundwater, third-party water, seawater, etc. In the case of this company, everything that they are doing is from seawater, which is a little odd. So we are now looking at seawater only being the source of withdrawal, nothing else. And that's something that they may have done good if they had substantiated with a note saying, why is it that all of their consumption is seawater centric, nothing else from surface water and groundwater. And for a country like ours, I would be surprised if that is true. But anyways, that is what it is. At the same time, the last observation is that when it comes to a lot of BRSR reports, we notice the use, a liberal use, I would say, of hyphen like this. Now, when you do this, e-waste 4.34 metric ton 22-23 and hyphen for 21-22, how do I interpret it? Did you not have any e-waste at all? Did you have e-waste, but you did not have a record of it? Did you have zero e-waste? Did you have, I don't know, what other interpretations could be drawn? right? The hyphen is as ambiguous as anything can be. So avoid the hyphen is the point here. Instead, even if you had put a zero or nil, that would have made it easier to interpret, or maybe a note explaining what you mean by the hyphen. At the end of the day, the hyphen doesn't make for a great way to communicate. So that's the instances that we have. So if I were to leave some guidance points here for the report preparation exercises for the next year, keep a constant eye on the BRSR XLS utility, because like I said, even if you are able to tweak a few things on the PDF format or the doc Word format, you will not be able to do that on the XLS utility or the XML format. So keep a constant eye on that so that you know what you want to report and how you want to report. Uh, Please pick up SEBI's guidance wherever handy, whether it is a formula that was there, whether it is some sort of a guideline that was presented. Please pick up that guidance wherever handy. We are hoping that SEBI will also come up with a guidance for the new format, which they have released in July. They haven't yet done, but they will hopefully do that. But otherwise, you still have the access to the older guidance. Block the hyphen. Don't use it. Avoid hyphen. A no or a nil or a not applicable is far, far, far better than a hyphen. And like I said, last cycle, a lot of time was spent on the PDF or the doc formats, and the XLS or the XML came much later in the day when it came to report preparers. Maybe you should spend equal time reviewing both the PDF and the Excel formats to avoid the kind of errors that we just went by on the Excel, especially on the XML format. And finally, because of the fact that there's an assurance around the corner, make sure you're disclosing only what you can defend. If not, it's as good as you kind of digging your own grave. If you cannot defend what you're disclosing, please do not put it out there. Make sure that you have enough reason and confidence to believe that this can stand that test. So that's the last point that I have as a guidance. I think with that said, I'm done with the talk. Questions, if at all any, we could start taking them up. Stuti, do you have any questions that we've got?
Yes. Hi everyone, I'm Stuti. So I have collated a couple of all of the questions actually, which have come to me on the private chat, as well as which have reached everyone. So I'll pass the questions on to Anveshi one after the other, and if in case we are not able to answer all of them, I request all of you to drop in your emails in the chat, and we will get back to you with the answers of the rest of the questions. So yes, Anveshi, I think one more question just came up on the chat, so I'll just, yeah. The first question is by Sushmita Gatak, and they ask that are supply chain disclosure only limited to top 250 companies?
At least for now, that's the way the guidelines, that's the way the notification says. Top 250 companies, and even within the top 250 companies, the expectation is that you cover 75% of your value chain, not the entire value chain, because that makes it much more tougher. Even 75% is a tough ask, quite honestly, but that's how it is. 75% upstream, 75% downstream, and that's the guideline. Yeah.
Okay. Thank you. The next question is by Rajendra Kokarakonda, and they ask, what is the difference between employees and workers?
Yeah, very simply put, white collar and blue collar is what we're talking about. The definition of a worker, I think, was there in the guidance document again, if I'm not wrong. And if I recall this, it's somebody who's there's an objective measure to it. I can't recall very well, but blue collar employee, blue collar would have been a worker, white collar would have been an employee, is how I would just leave it at this point.
Okay, thank you. The third question is by Mohan Kumar Prabhu, who is asking, what is the one issue is between understanding whether it is a standalone or a consolidated identity. How can this be understood for comparison across companies?
Yeah, I mean, not an easy one, quite honestly, not. The larger picture intent not just with BRSR, but even with other reporting mechanisms that have been there for a long, long time, globally, I mean, is to push companies towards consolidated reporting. Because standalone is, of course, only giving you a partial picture. But having said that, the realities have to be considered. The fact that the top 1,000 companies have nearly about 500 plus companies which are small caps. So you cannot expect them to be doing everything picture perfect from the year one. So the liberty was given to start with standalone just for the entity under consideration, and then expand it if they can do gradually so into bringing more into the boundary, into the reporting boundary. But having said that, I think you had a very valid point. Comparing A and B, Apple and Apple, wouldn't be possible at all at this stage, unfortunately, because of two companies taking two different approaches.
Okay, thank you, Anvishi. We have one more question by Rajendra, and they ask, GHG emission calculations formula or methodology provided by SEBI? Are any GHG emissions or calculation formula methodology provided by SEBI?
No, they don't provide any calculation methodologies, not yet. But as we go forward, maybe we will see something. I think about 3 or 4 weeks back, there was a set of consultation documents that were released by BE, or was it BE or BIS? BE, I believe, where they have started to kind of publish methodology documents for the Indian operations of the corporate. So we will hopefully see that all of this will come together. But at this point, there's no other methods that are published by SEBI or any authority in India.
Okay. Next question is by Rasappan Palaniyappan. Mechanism to get supply chain BRSR data. Please provide one.
Yeah, I think that's exactly the challenge that I think companies themselves are facing, where when you say bring your value chain into the reporting context, 75%, like I said, upstream and downstream, there's no one mechanism to go about it. And because there is nothing like that, companies are struggling to say, how do we really practically make this happen? To the extent that I think the CII folks, and if I'm not wrong, also the FICCI folks, have had deliberations with SEBI saying this expectation of value chain being brought into the reporting scope is not as real as it should be. I mean, in the sense that there needs to be some more relaxations on that front. At this point, unfortunately, there's no mechanisms to bring value chain. I mean, mechanisms as in drafted mechanisms. Each company will have its own approach to do that.
Okay, thank you. Next question is by Mehul Patel. 75% upstream and 75% downstream for value chain disclosure, or 75% upstream and 75% downstream is the expected disclosure.
I don't know if I understood the question, but let me quickly put it. It's 75% of upstream and 75% of downstream is what it is. The keyword, I believe, is and. If that helps answer, it's good.
Yes,
Otherwise, we could always
yes, I believe so. Yes, it's and or. Yeah.
Yeah. Okay.
Okay. Anjali asks, in principle 9, in essential indicator 2, can you please be with more clarity on the expectations on turnover of products and services as a percentage of turnover from all products and services that carry information about?
So this is, I think, the case where the expectation is that of your 10 products that you do, products or services for that matter, how many of them have a labeling or instructions or guidelines that are about environmental / social impact of that product, etc. So I think that's one case, especially in the case of services companies. That's one question that hasn't been very easy to answer. But having said that, what we've noticed is there was a financial company that mentioned the fact that even when they are doing a loan, disbursing a loan, they in their T's and C's, the terms and conditions, they clearly articulate what it means to kind of take that loan. And in that sense, they are making sure that the social implication of the loan being disbursed and it being honored by the person who's receiving it later is also accounted for in black and white. And that's how they call it labeling of the product or service that they are selling to their customers. So it's each is own in terms of the fact that not every product, not every service is the same, but we need to look at what can be done in your own context, in your own company's context, to bring out some instructions, some sort of guidance on do's and don'ts, so to say.
Okay. Next question is by Jyotish Kumar. For Section B requirement, name of the national and international code, certificates, labels, standards for healthcare provider. Is it mandatory to go for ISO 45001 and ISO 14001? We already have NABH and JCS certification.
So there is no mandatory requirement as such, but what the reason I think they get prominence is because they are the popular ones. 14,001, 45,001 when it comes to, of course, safety, occupational safety aspects. Those are the popular ones, and so they get prominence. Otherwise, if you have taken a different approach to achieving the same, and you can, of course, articulate it well enough to say that this is where we are, and we believe this is meeting our requirements, I'm sure your stakeholders will take confidence from that, and that should be good enough for now, to begin with, at least for sure. As you progress and see what you see your peers doing, you may want to then take a decision on doing things any differently, but that doesn't mean that you have to really start doing things any differently immediately. So
okay, thank you,
right.
Anvishi. We have a few more questions.
But I think we'll probably have to also look at the fact that Manisha's having a segment. So can we take
Yes.
note of these other questions and maybe attend to them offline?
Sure, we could do that. Yeah.
Yeah. All right. So that's helpful. I'm believing that there was a lot of questions that came up, and unfortunately, we're not able to attend to all of it, but we will do our best, and we'll come back to you on email and answer those questions. If you haven't left your mail ID, and if you you had registered with us directly, your mail ID should be with us. But if you want to kind of write directly to Manisha, who's been sending you the details, please feel free, and we'll get in touch with you and answer all of your questions as well. With that said, I think I'm passing it back to Manisha.
Thank you, Anvishi.
Yeah.
Let me just share my screen. Are you able to see my screen? The slideshow?
Yes. Yeah.
Okay, so I will just quickly run through an introduction of the BRSR gap assessment service that we provide from AtQuest. This is especially relevant for the companies that are preparing for the coming cycle. So what exactly are we doing here? Let me just... this gap assessment is for the previous cycle's BRSR report. We take that as an input into our comprehensive tools and analysis methods, which we have developed in-house. And we provide you with 6 different analyses that you can use. The first being your overall BRSR maturity score, which we get from one of our tools. You will then also see a heat map where you would be able to understand where are the problem areas and where is it that you can improve from a BRSR point of view. Then you also get an understanding of how well you're doing individually on the E, S, and G different pillars. We also will tell you how ready are you for the BRSR core audit, which is coming up. And you will also get to benchmark yourself against your industry peers. You'll get to see how well you're performing. Are you doing better or are you lagging behind? And the third, the last and very important one is an assessment against the best reporting practices from like global sustainability reporting standards. Okay, so how do we do that? We have a comprehensive toolkit here, which consists of 3 different tools. The first one is the Sustainability Maturity Assessment Tool, the SMAT. This is the basis for this tool is SEBI's guidance document for the BRSR, which states exactly how every BRSR question should be answered, what it should contain. So we have basically come up with a framework of a scaling of every BRSR question to assess how well is the question answered. And so there are about 400 plus points in this tool, which helps us assess how mature is your report. We also have the BRSR Core Assurance Readiness Check, which checks the 79 BRSR core KPIs. So the answers of your BRSR is compared to the BRSR core KPIs to understand how ready are you for your third-party assurance. And the third, the BRSR and IR principles mapping. And I can't emphasize enough that this is the best way that you can help yourself get ready for the assurance, right? The IR principles are the integrated reporting principles, which are some of the globally accepted best practices. These principles are taken in and they are mapped to every BRSR question. And we have understood which of these principles apply to which question, and therefore we are able to understand how the answers, are they in alignment to the IR principles or not? And you get a quantitative score out of that. So these three tools are based on the white papers and research guides that we have prepared on the BRSR. Like, for example, this was a white paper that was prepared a couple of years ago, I believe, before the BRSR actually became mandatory. The BRSR Done Right is actually an extension from this report, which is a research guide, which was released just a couple of months ago. And this is an in-depth analysis on the BRSR and IR mapping, which is the basis for this tool that we have developed. So a sample of this report is available on our website on the green wall. And we have the entire document is available to customers who are engaging with us for this service. However, if you're interested to learn more about it, then please do get in touch with me and we can see what we can work out. We also have a detailed analysis of the BRSR core that we have prepared in an infographic manner. This is also available on our website. It can be freely downloaded. I'll just quickly run through. I hope it's okay if we run a couple of minutes into 5. I'm just going to try to rush through this now. So the questions that we answer for you through this gap assessment, right? Is there a reliable gauge of the maturity of our BRSR report? Yes. So that is the overall maturity score that you would find as a result of our SMAT, Sustainability Maturity Assessment tool that I mentioned to you earlier. We also give you the areas of improvement. We give it to you section-wise, principle-wise. So you get to know exactly where is it that you would want to focus on. We also give you an idea, like actually the BRSR is an ESG report, but however, it doesn't tag the E, S, and the G part in the questions, right? So that's the extra step that we have taken. We tag every question, whether it is an E or S, or sometimes E and S, or an E and G. So we do all the combinations. And so as we come up with an overall maturity score of your report, we also come up with an overall E score for your report and an overall S and an overall G score for your report. So you get to know what are the areas that you might want to work on more. Like I mentioned, you get to compare yourself with your industry peers, and you get to know how ready you are and where it is that you need to concentrate on to get ready for your assurance audit. And this is the IR principles mapping, where there are 7 IR principles, and you get a quantitative score of how well you're doing for each principle. In a future presentation, we'll also delve deeper into this and understand even principle-wise, you can go in terms of BRSR principles mapping, you can see how well you're doing with regard to the IR principles as well. And with regard to the deliverables, we have a gap assessment document, which gives a quantitative score of the 3 tools that we mentioned. The deliverable 2 gives you a plan of action, more like qualitative with, some areas of where you can focus so that you can improve for your future cycle. The deliverable 3 is the exclusive access to our BRSR Done Right guide, which will help you get ready for your assurance. This is a typical table of contents that you would see in the gap assessment report. Like I mentioned, you would be talking about you'd be getting the assessment from the SMAT. On the ESG pillars, you would be seeing your performance, a comparison with industry peers, a readiness check, and your reporting maturity against the IR principles. And a typical table of contents for a plan of action would show you the areas that you need to focus for maturity, for assurance, and IR alignment. So we have two different modes of engagement. The first one being an independent analysis without consulting your team. And the second one, which we would prefer, is a consultative one wherein we would be speaking with your team to understand the actions that you've taken, how far down the sustainability path you have already traveled, and to make sure that our analysis is in alignment with that and we understand your report better. So this typically takes 5 to 10 days, whereas option 2 takes about 10 to 15 working days to get done. So why AtQuest? We have been working on the BRSR. We have been doing the BRSR reporting. We have been working on XBRL as well. Given the technical background that we already have, we have been doing gap assessments for several companies' documents. We have maturity assessment based on the SMAT as well as the IR tool. And we also have the readiness, the assurance readiness checks that we have developed. So with that, I'm closing this session and just letting you know that the next Tuesday, we would be taking up benchmarking the BRSR reports against the global best practices. And we'll be delving deeper into the IR principles and the GRI. So that would be the main focus for next Tuesday. Please use the same link to join the meeting next week as well. And thank you.